All right, everybody, bear with us for just 1 minute. So I'm running a little bit behind at work, so I thought we would start off the live stream from the office. So just let me pack up my stuff and we will be starting shortly. Hopefully everybody had a good weekend. Happy Monday to everybody. It is August 15th, 2022. I think it's about 8:40, so 10 minutes late. So apologize for being tardy. But today was a very, very big day on Wall Street. Okay, we have massive amounts of economic news to cover, a lot of economic data to talk about. The National Association of Home Builders / the Wells Fargo Housing Market Index came out. Didn't do too hot, so we're going to talk about that. We are also going to talk about the New York State, Empire State factory gauge that plummeted today, going into contraction territory. So the manufacturing activity in New York State did fall about 42.2 points to about negative 31.4%. So ouch. Pretty bad hit there. But if we've been paying attention to the streams, we've already forecasted this many months in advance. Okay, so the first business day of every single month, we always talk about the Institute for Supply Management PMI index, okay? And as we've been seeing, if we go back to the July reading, which we got out on August 1st, the PMIs rolled over all the way to about 52.8, okay? So even though anything over a 50 reading signals expansion in the manufacturing sector of the United States, what we've been seeing, if we look all the way back to January, February, March, April, May, the PMIs have been rolling over, okay? We started off at about 58, 57, 56, 55, and now in July, we got that PMI reading of about 52.8. So it's not surprising that manufacturing activity in New York State absolutely fell off of a cliff. Now, I want to do something a little bit different today on the live stream. I'm going to introduce a new, segment. It's going to be called the Tweet of the Day. So a little bit later on in the live stream, we are going to be pulling up an interesting tweet by a hedge fund manager that I respect very, very much. And we're going to be talking about that report that came out. So the New York State Empire, the Empire State manufacturing numbers. Also, everybody, we're going to be talking about Saudi Arabia. Sunday night, so I think Sunday, right around 8 p.m. New York time, Aramco, so Saudi's Aramco posted blowout, just unbelievable, rip your face off earnings. Earnings jumped about 90%, so their quarterly profit came in at about $48.4 billion. So think about that for a second. As we've been talking about on the streams, we were covering Shell, we were covering, hold on, let me put my laptop away. We were covering all the major oil companies. So we were covering Shell, we were covering ExxonMobil and the like. And I believe if we take all the quarterly profits in Q2, if we combine Shell, ExxonMobil, and Chevron, in Q2 alone, they reported quarterly profits combined of about $42 billion. Well, Saudi's Aramco blew that out. Okay, so reported more profits than all of them combined at about $48.4 billion. So here's a little tour of the Wework office here, everybody. Once we get down to the street level, I'll say what's up to the chat here. But yeah, thank you for tuning in on this beautiful Monday. Thank you, friends. Let me see if I could turn the Wi-Fi off. Hey, good to see you, Ruby. Actually, may get a little glass of water here. Hope you guys don't mind. GGMYC, what's up? Good to see you. Connor says, isn't this Wework on Broadway? So not this one. This is the one at 28th Street. Just gonna get a little bit of water, guys. Paul Greenwell, welcome. Good to see you. Yeah, usually we start the stream off at street level, but I was running a little bit over. So hopefully you guys don't mind. I'll give you one more look at the office space. Yeah, so the Weworks aren't a bad deal, everybody. Not a bad deal. I think it's like $300 or something a month. We may drop the stream. Let's see if the internet holds up in the elevator. What do you guys think? Yeah, points travelers, like you should agree. Time. England and stuff. Have a go, man. Free at last. Free at last. Thank God Almighty we are free at last, man. Wow. What a day at work. Jeez. You know, today was one of those Mondays that was just not too good. Not too good in a sense of just like too many emails, too many... Just, it was a whirlwind today. But everybody, thank you for joining. Welcome back to Walks on Wall Street. Hopefully everybody had a restful weekend. Hopefully you had some time to, you know, recharge, sit back, relax. And now you are ready to face the week ahead on this Monday. So let's see who we have in the chat, everybody. Hey, we have AT4 Nerd. Says first, good to see you, AT4 Nerd. We have Gregory is here. Says good evening all. Raphael, welcome Raphael. Paul Greenwell, Soho is here. Tiffany Allen, hey Tiffany. Shauno Muhammad is here. Welcome Muhammad. Brian, Vinny Castellano, Bidzita Lopez. Good to see you, Bidzita. Hope you're well. Charlie Richardson is here. Hey Charlie. Adrian is here. Ali says hey. Lilla says good evening Tom and everybody. Well, so it was an action-packed day today on Wall Street. Now, the two main pieces of economic news that we did get out is, wow, before we get into that, check out this view of the One Vanderbilt here. Absolutely beautiful. So we did hear from the National Association of Home Builders / the Wells Fargo Housing Market Index. And not too good. Not too good. So the survey was sent out to a lot of the home builders, and an interesting statistic that came out of the report is that out of 1 in 5, so 1 in 5 of the home builders that were surveyed are starting to drop their prices, or let's just say they're willing to negotiate with the buyer to do one of two things. Number one, to close in additional deals, but to number two, prevent the deals that were already closed from falling through. So as we know, that 30-year fixed rate mortgage has gone up about 100% year over year. I think ever since that 10-year U.S. Treasury yield has come down a bit, so has the 30-year fixed rate mortgage. But mortgage rates are still pretty high comparing to you know, what they were this time last year. Hold on, just let me get around this garbage here. So we'll do a deep dive into that report. We'll also talk about the New York State manufacturing numbers that came out, which were not good, and we'll also do a deep dive into the earnings report of Saudi Aramco, which reported absolutely blockbuster numbers, and that just goes to show the oil business is alive and well. Hey, Dolly Girl Twins says, tip of the hat to you, Tom. Good evening. Good to see you, Dolly Girl Twins. Welcome. Hope you're well. So as we turn the corner here, we're going to see a really, really nice view of the Empire. Looks really beautiful. Ramsey is here. Says, hey, Tom. What's up, Ramsey? Good to see you. Hey, Bagels and Walks. Says, Tom, since you left a Wework, did you see the news about Adam Newman? So I did see the news about Adam Newman. We'll talk about that a little bit too. So for anybody who doesn't know, Adam Newman is the pioneer, I guess you could say the founder of Wework, right? So the office space sharing company. And I'm very familiar with this because I used to do a lot of work or know a lot of people that worked at the SoftBank group. So the company that I used to work at was very, very heavily funded by SoftBank. So SoftBank is a Japanese conglomerate, and the CEO and the founder is Masayoshi Son. And SoftBank is really known for making these really, really crazy investments. I guess the most notable investment that SoftBank has ever made, and I would say the most successful, is probably Alibaba. So I believe that was the most successful investment SoftBank has made, but ever since then, I mean, they've been losing a lot of money on their vision funds. I think they raised 2 particular funds, Vision Fund 1 and Vision Fund 2. They actually invested massive amounts of money into Adam Neumann and Wework, in which case Adam Neumann essentially ran the company into the ground. There was actually some allegations. I'm going to call them allegations because, I don't know for sure, but there was some allegations that Adam Neumann was squandering a lot of the money, right? Going on fancy trips, fancy vacations, chartering private jets with investor money. And now, ever since Adam Neumann was ousted, I believe the head of Wework is Marcelo. And Marcelo is a billionaire that I believe sold his company Brightstar to SoftBank as well. I think he sold it for well over $1 billion. Brightstar, if anybody's familiar with that. But the news is, I believe Adam Neumann was able to raise about $350 million from some venture capital firm, A16Z. I'm sure many of you are familiar. Yeah, I'm hearing a lot of so War Walkers here says Adam Neumann is a spoiled brat on Y&R. Yeah, I mean, he's a very controversial figure, and I think there was an ethics question there, War Walker. I do agree with you. Funny story, I think I told you guys this story before, but I actually met Adam Neumann in person. So at 1166, for those of you who don't know, there's a big T-Mobile / Sprint headquarters there. And during the merger, obviously there was that huge M&A activity with T-Mobile and Sprint. And the reason why Adam Neumann was there is because a lot of the SoftBank people were there, because SoftBank had not only huge investments into Wework, but I think they owned at one point almost half of Sprint at the time. So anyway, I would see Adam Neumann sometimes in 1166, and he would always be with like a pack of people, and they looked like high school skateboarders, honestly. They would be wearing like beanies and things like that. I mean, the guy is a great entrepreneur. I mean, I'm not trying to knock the guy, but it was a little bit bizarre. They didn't look like your average typical, textbook businessmen with the, the white shirts and a pressed tie. They would wear beanies and flip-flops. In any event. Hey, EBITDA here says, hey Tom, hope you had a good start to the week. I did. EBITDA, how about you? How about you? EBITDA says, are you talking about Wework, Adam Neumann? Yeah. So, EBITDA, I'm actually interested to see what your thoughts are on that. So I believe, and I'm not too sure what the exact amount. Could anybody please post the exact amount in the chat? I think he was able to raise, I think $350 million for his new venture. Is that correct? Ramsey says, hey Tom, is it hot in New York City? Not too bad. It's actually not too bad out tonight. Not too bad. Very low humidity. Very low humidity, Ramsey. Daza UK says, hey Tom, good to see you. Hey, Desi Guy USA says, hey Tom, please show us the Empire State Building as it is illuminated with 3 colors of orange, green, and white, as it is India's Independence Day today. Oh my God, I didn't know that. Sure, well, it looks beautiful. Well, happy Independence Day to all of our Indian viewers. I think one of my good friends sent me a message on Twitter about that. I did not know it was India's Independence Day. That's awesome. If that's the case, let's actually walk down a little bit further, and then we'll see a better view for everybody. But yeah, happy Independence Day to all of our viewers in India. Hey, Asmurray6 says, good evening, Tom. Good to see you, Asmurray6. Anthony says he also raised $70 million for Flow Carbon, I believe. So Anthony, what was the? Because I haven't been keeping up with the news flow today. What is the particular company he's raising all that money from? A16Z. Is it like another Wework style type company, or what? Maybe you guys can enlighten me on that. But I know it was very controversial because everybody's like, look, you're going to give Adam Neumann all this money after he was given billions by Masa Son at SoftBank, and he essentially ran that thing into the ground. Now, let me tell you, for transparency, not to just dump on the guy. I don't like doing that. I think Wework is a fantastic concept. I spend a lot of money at Wework, but I just think hold on one second. So here we have the Flatiron Building. So here's what I believe. I think you have amazing entrepreneurs that are huge visionaries, but that lack the critical business skills. So that's why in the VC space, usually what happens is you get, an investment from a venture capital firm, but you also get like the free consulting and advisory services. I think Adam Neumann is one of those amazing visionaries. I just don't think he is as skilled in the business segment of how to operate a profitable business, if that makes sense. Hey, Patrick Bateman is here again. Says, hello, Walks to Wall Street. I have returned yet to another stream. Well, good to see you. Good to see you, Patrick Bateman. Always love to have you here. Dan Zhang says, hey, Tom, didn't he invest into a lot of stupid companies when he was still in charge? So I don't know about that. I think the biggest thing, Dan, that was so controversial is allegedly, and again, I'm going to say alleged because I honestly don't know. Allegedly, he took a ton of the money that SoftBank injected into Wework and blew it on like private jets, partying, houses, and all that. So, hey, Carmen is here. Says hello, Tom. Hey, Carmen, good to see you. Maria says hello, everybody from Sao Paulo. Welcome. Connor says, Tom, are you walking through Soho tonight? We may just go a little bit near Soho tonight. But I do want to walk uptown because I need to get the train in a timely manner. Hey, Daryl is here. Says, hey, Tom, it's Daryl from Chicago. Welcome, Daryl. Good to see you. So on Sunday night, everybody, Saudi Aramco reported a 90% jump in quarterly profit, obviously due to higher oil prices and higher refining margins. So check this out, and this number is really going to blow your head off. It says net income reported $48.4 billion. This is up from $25.5 billion a year ago. So Saudi Arabia as a whole, so aside from obviously the most profitable oil company in the world, Saudi Arabia's economy is expected to grow 11.8% year over year, as well as inflation is at its lowest point in Saudi Arabia in comparison to what we're seeing here in the United States, about 8.5% CPI. Saudi Arabia is running at 2.3%. So, I mean, just massive numbers there. And this has sort of sparked controversy amongst politicians, amongst investors on Wall Street, to sort of say, look, they need to start pumping oil to help us out, because it's sort of like a give and take relationship there. We tend to sell the Saudis a lot of our military equipment, our high-end military equipment, and help them out on that front. But it doesn't seem like the Saudis are going to pump additional oil to bring down the price or lower the price. However, President Joe Biden did go meet with the Saudis a couple weeks ago, and supposedly they promised to increase production, but I don't think that'll make any material impacts. But just for some perspective, if we think about Chevron, if we think about Shell, if we think about ExxonMobil, all of those particular oil companies combined, I believe, made about $42 billion in Q2. Aramco did that by itself in Q2. making about $48.4 billion. So really, really insane. Hey, Western Mass Davis here. Good to see you. So this is, let me walk over a little bit so you guys can see it. I think the light is getting in the way. But the Empire State Building is lit up tonight for India's Independence Day. It definitely does look beautiful. So it appears we have a bright orange at the top. In the middle, we have a glowing bright white. And then the classic green. I think it looks fantastic. Insurance practice exams is here. Good to see you. Welcome. Jack says there are other countries that supply oil as well. Good to see you, Jack. Hey, NMB 045 says happy beginning of the week to everybody. Yeah, hope you had a good one, NMB 045. Dan Zhang says, I remember watching a Bloomberg documentary that says he even invested in a surfing company or something. Yeah, I mean, it's definitely quite bizarre, right? It's definitely bizarre what he did, especially after just the sheer trust that Masa-san put into Adam Neumann. So SoftBank actually reported earnings, I believe, last week, where Masa-san actually came on the earnings report or the earnings conference call and really openly admitted the mistakes that they've made with the Vision Fund. I mean, they've been losing billions upon billions of dollars. But if there's one thing I've learned from Masa-san, it's to be extremely, extremely persistent. And Masayoshi-san, obviously at the head of SoftBank, is extremely, extremely persistent, and I think they will make it out of this ahead. The LT Prod says, good evening, Tom. Good to see you. Welcome. Thank you, everybody. Joe Driver says, hello, Tom and Walks on Wall Street family. Welcome. Good to see you guys. Dusty Cole is here. Good to see you, Dusty. So I think we'll walk down to Washington Square Park and then head back up. Because the further we walk down, I think the better the view is going to be of the Empire State Building. So I think that'll be good. So two pieces of economic data that came out today that I want to talk about that I think is actually very important to pay attention to. So the National Association of Home Builders, or you could call it the Wells Fargo Housing Index, dropped about 6 points in August to 49. Anything below 50 is considered negative, but as we've been talking about once again on the streams, it looks like these numbers are consistently rolling over, and they're rolling over in tandem with the PMIs. Okay, so as we know, on the first business day of every single month, the Institute for Supply Management will put out the PMI numbers, and I believe in July, the reading was just north of 52, which actually signals economic expansion in the manufacturing sector, but that's not the correct, appropriate way to look at it. The way you need to look at it is you need to plot the PMIs on a chart or on a graph or whatever you want to do, and look at the trend. And the trend is severe decline, or as I like to call it, rolling over in the PMIs. So we're seeing the same thing with all of these home builder sentiment indicators. And I believe this is the 8th straight month of declines in this particular index. So I want to read you a little bit of an excerpt that came directly out of the report. And as always, after the live stream, if you go to the YouTube community page, I will put all of the necessary links on the stream recap. But this was very telling, and it's exactly what we've been talking about for the past, 6 months on the stream. So here's a quote. It says, tighter monetary policy from the Federal Reserve and higher construction costs have brought a housing recession, says economist Robert Dietz. So the exact same stuff we've been talking about, tighter monetary policy, which is one of two things. Number one, the raising of interest rates by the Federal Reserve, and the unwinding of the balance sheet that is made up of mortgage-backed securities and U.S. Treasuries, thus sucking liquidity out of the system, on top of higher costs for building these particular homes is making builder sentiment near all-time record lows. I think this was one of the lowest readings on the index in record. Hey, Melissa White is here. What's up, Melissa White? Good to see you. Hope you all are doing well. Waylon says, hey, Tom. Good to see you. Abstract Angel Artist says, hey, everybody. Hey, Tom. Nice night for a walk. Yeah, I mean, there's absolutely zero humidity. It's a really, really nice night out. We're going to be walking downtown for a little bit under all of this scaffolding. Hey, Craig says, hey, Tom, from Newcastle, Australia. Love it. Good to see all of our Aussie viewers. Hopefully you guys are well. Do we have Wendy England here? Ah, Wendy England, yes. Says, I wanted to read Wendy's comment. Says, still not much inventory for sale in Vancouver. Yeah, so that's a good point. So Wendy's point is actually interesting, and it's probably good to explore. Because I believe it was late last week, we actually got not only existing home sales data. You know, let me cross the street here. We got some housing data last week that says year over year, the prices of single family homes are actually still increasing. So we're seeing a little bit of divergence here where interest rates are going up. Yes, that's true. But the prices of these single family homes are actually still going up as well. Now, this could be a little bit of a lagging indicator. You know, you never know. Maybe in a month or two, prices will start to come down. But I think one of the reasons why prices are not yet abating here is because of very, very low inventory. So if we go into the report and really break it down, there's three main segments, which we'll talk about. Wow, but everybody, check out this beautiful view of the Empire State Building, once again lit up for India's Independence Day. If you guys are loving that view, leave a like on the stream. So if we dive deep in the report, it says current sales conditions dropped 7 points. Sales expectations in the next 6 months dropped an additional 2 points, and buyer traffic overall fell 5 points. So here's the biggest takeaway from the report, and here's what I think, and you guys could let me know what you think. It says that 1 in 5 builders in August reported lowering prices in the past month to do one of two things. Number one, to close additional deals. But here's what's interesting. The second point is to keep existing deals from canceling. Okay, so usually as the market turns, as interest rates go up, you know, maybe buyers get a little bit of cold feet, they get nervous, and they want to pull out of the deal. So it seems like a lot of these single family home builders are actually taking the initiative to give discounts. Maybe they are giving credits, or, you know, essentially what I'm trying to say is we're starting to see slowly but surely the negotiation power shift back over to the buyer from the seller. Now, think about what we saw during the pandemic, and I'd say about, 8 months after the thick of it, as I like to call it. The sellers had no negotiation power at all. So I think over the next 6 months, if you're looking to get into a home, if you're looking to buy a new property or even an existing home, I think you're going to be able to negotiate here. And I think that's very, very good. And the reason why I think that's good is because we always revert back to this particular study, and it is one of the largest studies ever done on first-generation millionaires in the United States. And the study says this. Well, these are beautiful American flags, by the way, in the background of the Empire State Building. Fantastic. That's a money shot right there. But here's the statistic. Out of all first-generation millionaires in the United States, the vast majority of their net worth is made up in equity in their homes. So what does this mean? Well, last week we got an additional piece of economic data that came out that said home affordability reached an all-time record low. So nobody can afford to buy a home, and America is transitioning towards a renter nation, which is really going to impact or hollow out the middle class. Because if we think about the easiest way in the United States for class advancement or class mobility to jump from the lower class, the bottom 90% into, the top 1 percentile and even above. That is owning a home, equity in a home. And if we do not have regular, ordinary people that have a clear pathway to ownership, whether that be a single family home, duplex, triplex, I think that is going to be very, very dangerous for the health of the middle class moving into the next couple decades. So look, I think it's good that prices could potentially be abating here. I think you're going to see a lot of rhetoric on CNN Business, on Fox Business, calling for Armageddon. But at the end of the day, what I think is more important, and this is a beautiful Tesla right here, it's more important for us as investors to keep a level head. Okay, if prices start to come down, you should look at that as an opportunity. Okay, you need to keep your head on straight. It's not the time to go hide under your bed and pull the covers over your head, right, like the media wants you to do. Look, if there's deals in the marketplace and the deals work, if the property's cash flow, you should attack those deals. Okay, so in any market condition, there's going to be presented opportunities. And again, I'll read this excerpt from the report. 1 in 5 builders in August reported lowering prices to not only close additional deals, but to reduce the amount of cancellations or limit cancellations. So I think as we move into September, October, November, and December, or the latter part of the year, I think the power is going to transition here from the sellers to the buyers, and I think there's going to be some good deals to be had. What do you guys think? Dan Zhang says that's why Bloomberg News is the best pure information. I agree. I always try to either get it from like Bloomberg or Wall Street Journal, something like that. But I think that's good news. I think that's good news overall. Hey, Sherry is here. Says, look at 100-year history of housing. Definitely a large drop is coming, says Sherry. Let's see. Hey, Sabrina Fair is here. Good to see you, Sabrina. Welcome. Bob says housing prices need to come back to 2008 levels where the average people can buy. Yeah, I don't know if it'll come down to 2008 levels. So let's talk about that for just 1 second, okay? So in the report, and I didn't have enough time to program the Nightbot, but here's something else that was interesting from the National Association of Home Builders report that came out today. So the confidence, ooh, check out that roach. I think some of them here have wings, if you could even believe that. Hey, Western Mass Dave, FredX is here. What's up, dude? Good to see you. So, okay, let's talk about confidence in particular market segments in the United States. And this actually surprised me, and we'll talk about why this actually surprised me. So it says confidence in the Northeast fell 9 points, the Midwest fell 3 points, the South fell 7 points, and the West, where home prices are the highest, home builder confidence fell 11 points. Now, if you were to tell me to guess the home builder confidence by segment, like Northeast, the South, I would have guessed that the South would have fallen the most. But it looks like the West and the Northeast fell the most. So in the Northeast, home builder confidence fell 9 points, as opposed to only 7 points in the South. So I'm going to sort of explain why I think, or why I thought it was going to fall further in the South as opposed to the Northeast. So in my opinion, I think ever since COVID, we've been seeing more irrational exuberance in places like the South. Okay, you could think about Florida, that's probably the biggest one. You know, potentially some overbuilding, some people, you know, maybe overpaying for homes down there. And look, I'm trying to be non-biased as possible because that is actually where my rental property is located, in Miami, Florida. But again, as an investor, I think it's important to be non-biased here. In the Northeast, we've actually haven't seen that much craziness. So I would have actually predicted that confidence would drop in the markets where it was the most turbocharged and the most crazy. And slowly, home builder confidence would actually return in places like the Northeast, where it has stayed depressed longer than those most southern states. But look, I guess I was wrong. Hey, Long Island Duck 52 says if they can fly in Florida, why don't they leave? Yeah, that's true. Hey, Rent 1018 says Tom, real estate has an 18-year cycle. 2008 was the last crash. Next crash is in 2026. Wow. A lot of confidence there, Rent 10. I respect it, dude. I respect it. So, Rent 1018, here's my question for you, because I'm actually genuinely curious. What do you think is going to be the trigger of the next housing crash? I personally don't think you're going to see a cataclysmic housing crash, but hey, I'm open to hearing any ideas. This is the New School of Design, by the way. Very, very notable school. What we've been predicting, though, talking about a housing crash, if you guys remember, I've been talking about the Chinese commercial paper market probably for the last 6 months now, how I'm very, very concerned about it. And it seems like the reckoning is coming. The reckoning is right now. Massive wave of defaults. Yeah, maybe I'll make an entire live stream about that. But yeah. If you want to know a little bit more, so in this week's Behind the Street newsletter, everybody, I'm going to be writing about the Chinese commercial paper market in a little bit more detail. So if you see the QR code at the top right-hand corner of your screen, go ahead and scan that QR code, and every other Tuesday after the market closes, I will send you a free investing newsletter where we cover not only the US equity markets, we cover emerging markets, the housing market, fixed income and all that. So if you're not yet subscribed, please scan that QR code and you can join the newsletter. It's completely free. Hey, Seppo says, how strict is it now? Do you need to quarantine if you travel from Europe? Ooh, I don't know. If you're traveling the United States, I don't think you need to quarantine at all. Yeah, I mean, because I just had a friend come here from Korea and they didn't have to quarantine at all, so. Peter Webley says you can have a functional economy and a zero COVID policy. I tend to agree with that. Wow, check out one more view. How beautiful is the Empire State Building tonight, guys, lit up for India's Independence Day. Fantastic. So I'm going to take down the QR code now, but once again, if you scan the QR code, you will be signed up to receive my free Behind the Street newsletter, which is a free investing newsletter I'll send to everybody. Hey, Two Harbors, thank you so much for the $1 donation. You are way too kind. Appreciate it very, very much. So in addition to the housing market, we did get some manufacturing news coming out of New York State. So New York Empire State Factory Gauge plunges in August into deep contraction territory. Manufacturing activity in the state of New York fell 42.4 points to negative 31.4, the second largest monthly decline on record. And check this out, guys. This always goes back to my joke. There's only two particular professions that you could always be wrong consistently and keep your job. Number one, it's a meteorologist, the weatherman. You could be wrong all the time about the weather and still keep your job. Number two, it's economists. So check this out. Economists were expecting a reading of 5. Coming out of the manufacturing sector in New York. We came in at negative 31. So the experts predicted 5. The number was negative 31. I mean, just talk about demand destruction, falling off a cliff. Now, this isn't to say that I'm dumping on the economists, right? It's very, very difficult. I think it's just a funny joke just to poke some fun at the profession, but it just sort of puts it into perspective that nobody really knows, right? Nobody really knows exactly, right? We can only make our best guess. So this isn't to, offend or poke fun at economists. I have personal friends that are economists, but it's just a, funny joke I always like to revert to. Kia says, hey Tom, how often do you go live? So we go live at 8:30 p.m. New York time. about 5 days a week. So about 5 days a week between New York City and Miami. And quick announcement, everybody. So we will not be live tomorrow, unfortunately. I will be traveling all day. And Wednesday is like a 50-50. So we may be live Wednesday, we may not. If I get back from my work/golf event before 7, we'll go live. If not, I'll just post a standalone video and we could talk and hang out in the chat. Natalie Kelly says, hey Tom, commercial real estate is in trouble. Yeah, I mean, yeah, I guess you could say that. Yeah, Dusty Cole's like, boo. Memo says, hey Tom, what is the paper on Follow the Money about the Inflation Reduction Act bill? So I don't know if there was a paper. I think we did a live stream and we were talking about, so what I try to do on the stream is not to argue whether something is good or bad or not. I think we try to analyze it from a financial analyst standpoint. So the Inflation Reduction Act is going into effect whether we like it or not. There's going to be increased taxes on share buybacks, increased taxes on corporations, whether you agree with it or not, to go towards funding two main things. So the first thing is climate initiatives, right? So we could think about solar panels, we could think about wind, we could think about hydrogen, and then the second thing is healthcare, right? So it doesn't matter if we agree with it or not. Our job as a financial analyst and investors is how can we best capitalize on these opportunities. So since we know that there's going to be massive amount of subsidy going towards solar, going towards wind, well, if we look at the market and we hammer down to an industry segment, so for example, Enphase is a particular company. Now this isn't a recommendation to buy a particular stock, I'm just trying to make an example. So for example, if you look at the sectors within the market that are outperforming right now or showing relative strength, solar is one of them. And I think it's a coincidence that this bill just gets passed and there's going to be billions of dollars into subsidy towards solar, towards wind. So my thesis is that it's a very good possibility that over the next coming years, you are going to see emerging new true market leaders in the solar industry, in the wind industry, that have exceptional profitability, so compounding out their earnings at 25% compounded annualized growth rate, have great return on equity, good product market fit, and I think that bill will help give that an extra push. So that's sort of what we were talking about when we explain the concept of follow the money. So the government is going to put incentives in place to say, hey, you know, we want this push towards a green initiative, we're going to give tax credits, different write-offs, capital injections to build this infrastructure. So I don't know, that's sort of what the thesis there was. Miguel says, so invest in solar stock. Yeah. Atavra says, no newsletter since June. It will be out this week. It was supposed to be out last week, but I wrote the entire thing and it got deleted and I was very demoralized. But we're on track now, I promise. Abstract Angel Artists, thank you so much for the donation, my friend. It says, hey Tom, love your channel. Ever seen my art? I have not. I'd love to see your art though. If you want to post some photos of your art, drop them in the Discord, dude. We would absolutely love to see it. I'm interested in seeing your artwork. I think the group is as well. I would love to see it. Christian Wilson says the Wall Street Journal had an article about lithium running out at some point. You know, I think I actually read that today. So on last night's stream, we were sort of talking about this debate. And before I go into this, I just want to make a big disclaimer here. I'm not an engineer, I'm not a scientist. I don't know anything about that stuff. That's not in my wheelhouse. I know many of you on the stream are, engineers and actually know what you're talking about. So feel free to step in. But so essentially there's going to be two major pushes, I believe. Number one is what I like to call like the Tesla route, so a true EV with battery technology. But then there's going to be hydro. Hold on one second. This is like a very squirrely intersection. I just want to make sure don't get hit. All right, so then I think there's also going to be tons of money pumped into, what is the name of that Toyota that runs off of hydrogen? Does anybody know the model of the Toyota that runs off of hydrogen? I'm drawing a blank on it. In any event, so there's that argument about what's more efficient, having these massive batteries, having limited charging capacity, or should we shift over to just hydrogen powered cars? Now, I'm not smart enough to know which one's going to win out. If you ask Elon Musk, he thinks that hydrogen powered vehicles are ridiculous. But I think it's important. Ooh, Zebatati, you're right. You're right. That is what it's called. Common Man 80 says hydrogen is another good long-term investment. So you guys are right. Yeah, Mirai. So the Toyota Mirai is a hydrogen-powered car, and so and again, I'm not an engineer. I don't know anything about this, but here's the two arguments that I've been seeing in the media, right? And Elon Musk, for whatever reason, he's much smarter, more talented than I am, but he says that hydrogen power is very, very inefficient because it's very expensive to, number one, produce hydrogen from non-renewable, from renewable resources. Right now, the vast majority of the hydrogen is produced from fossil fuels. Now, there is technology that is coming out that you can produce hydrogen from renewable resources, right? But then how do you transport the hydrogen? You have to build the infrastructure, just like you go to fill up a gas tank, you need to fill up your car with hydrogen. So could all of that stuff be built? Yeah, probably. I think it's either both of them are going to win out or it's going to be one of the others. So I'm not smart enough to know where to place my bets, so I'll probably be diversified. But what do you guys think about that? Frito says that's BS. What is hydrolysis? So yeah, and again, I'm just making the arguments on both sides. I'm not saying if I think one is right or one is not. You know, I think there's actually a company in upstate New York, in Albany, that makes those, that makes equipment to do exactly that. I think it's called Plug or something. Plug Power, Plug Energy. Dusty Cole says hydrogen is brilliant. Yeah, again, so I just will preface this by saying I'm not trying to make the argument for or against. I'm just presenting the 2 points. And look, investment is going to go into both. I think that's almost a guarantee. Investment will be poured into renewable resources to produce hydrogen. There's probably going to be a ton of money going into produce hydrogen-powered vehicles. I agree, but I'm not smart enough to figure out which one is actually going to win out in the end. So I'll probably just place my bets into a few select companies that are actually profitable. So Rudolph says both will bring destruction of markets. Nuclear and fossil fuels are the ones really reliable sources of energy. Okay. Hey, Best Bets TV says I work for a popular car dealership here in New York. They're predicting all cars will be electric in the next 5 to 10 years. Yeah, so that's definitely the Biden administration's initiative. I think you're 100% right. What they want is all vehicles that are sold in the United States by 2030 to be all EVs or, you know, hydrogen or EV. Well, I guess a hydrogen-powered car is technically an EV, but it's just a different process, right? The hydrogen, I don't really know how the process works. I'm not too technical, but If you type !1 in the chat, so !1, there's actually a really good CNBC interview, that breaks down how a hydrogen-powered vehicle works, and I would definitely recommend watching that. Jacob says, so Michael Burry sold his portfolio and kept a prison stock. Yeah, I saw that too. I did see that too. So Michael Burry is very famous for The Big Short, and I guess he liquidated all of his equity holdings. Gene says hydrogen hybrid electric will power mostly larger transportation trucks and buses. Electric will power mostly smaller passenger cars and small delivery trucks. Gene, thank you for that. Thank you for the insight. I appreciate it. So Gene, I have a question for you. Supposedly, Tesla is working on their, I believe it's called the Tesla Semi, which, I don't know, there's rumors that it could potentially one day have about a 900 to 1,000 mile range. What are your thoughts on that? Love to know your thoughts on that. Hey, Destructionist says, I'm not sure how well all EVs that would work in a place like Canada, where all the cities are far apart and it's such a cold climate. Yeah, that's true. That's true. Well, I'm a huge believer. So here's sort of my thesis, right? I think that entrepreneurs will figure it out. I tend to be an optimist. You know, many times I'll get emails after the streams of people telling me that I'm sometimes too optimistic, where I could almost be like blaringly ignorant sometimes, but I think that's just how I'm hardwired. I think that if there's a problem that we have in the United States, there's entrepreneurs not only in the United States but around the world that are working around the clock to fix these issues, and I think we'll probably figure it out.
What is that?
Hey, how are you?
What is this?
It's a live stream.
Can I see it?
Oh, no.
Can I be on it?
No, stop.
Hey!
Hey, dude, stop. Dude. Hey, no. Dude, stop.
Can I see how many viewers do you have? I want to be famous with you.
I know, but that's not very nice to do that.
Okay, hey. What are you recording?
That wasn't nice to do that.
No, but what are you live streaming?
I know, but that wasn't nice.
What are you recording yourself for the stream?
It's not nice.
Shut up.
Sorry about that. Let me just fix it. Yeah, yikes TV, I know. Give me 1 second. We will, I just gotta fix the gimbal, hold on. All right, give me 2 seconds, guys. Sorry about that. I think we're back in focus. Let me see. All right, let me know in the chat if we are back in focus. Let's see. Noodle says, hey Tom, when are you going back to Miami? So I'm actually going to be going back to Miami tomorrow, surprisingly. So for those of you who are just joining, tomorrow we will not have a live stream. We will be live either Thursday or Friday, but we will not be back tomorrow. Connor says, we're good, Tom. Those were NYU kids. Those were definitely not NYU kids, but in any event. Hey, D-Hot is here. What's up, man? Good to see you. Charlie Richardson, welcome. Good to see you. So I forget what we were talking about. I lost my train of thought. I think we were talking about whether we think that the Tesla semi-truck will actually be able to have a range of about, I don't know, I'd say 800 to 1,000 miles. Because if you think about it, here's the major downside of Teslas right now.
If you live in a very rural community or rural area, it's kind of difficult to make big cross-country road trips because every time you have to go charge to a charging station, I think it may take 5 or 6 hours for a full charge. Now with hydrogen, with a hydrogen vehicle, it's essentially just like filling up your gas tank, right? Now the downside with that is not every single state in the United States has hydrogen fueling stations. That's the only downside of that. But look, I think as the economy grows, I think as entrepreneurs and governments around the world put in place investment into these type of programs and subsidy, I think it's going to grow. I mean, we've always adapted as humans, right? We started off with horse and buggies, and we went to internal combustion engine cars, and now EVs. So I think the evolutionary process will definitely continue to be. Sandeep is here. Hey Sandeep, good to see you. The LT process, the Lucid Dream Edition, has 516 mile range. Very nice. Hey, Lupe is here. Good to see you, Lupe. Always a pleasure. So Lupe is our great moderator from Oklahoma. Always a pleasure. Brad's Brains says left coasters are driving the EV momentum, and they don't have any idea how the entire middle of the country actually lives. Yeah, so I think it's very important to be cognizant of how we produce the power, right? So many people will be like, oh, I'm 100% environmentally friendly or 100% green, I'm 100% off of oil. But I mean, we have to understand, when you plug your car into the wall, check out this beautiful view of the One World Trade Center here though. But if you look at, if you think about when you plug your Tesla into the wall, where is that power coming from, right? It's definitely not coming from 100% solar. It's definitely not coming from 100% renewables. Many times it's produced from natural gas and other power sources like that. Hey, Hassana says, hello, I'm from Morocco. Good to see all of our Moroccan viewers. Welcome. I think we're going to turn around here and then head back up because I do have to go back to the, what's it called? Moynihan train station. Ooh, Gene says, Tom, a company called Lion builds commercial EVs and swap batteries on the job. Just as you fill up the tank, they're building a plant in the United States. Wow. That's interesting. I didn't hear about that. Photos from around New York says there are already hydrogen fueling systems in California. Yeah, are there any hydrogen stations in New York? I don't know. So I was watching an interesting YouTube video where a particular gentleman was actually reviewing one of the Toyota hydrogen-powered vehicles, and it was actually really cool. But here's one of the downsides. Here was one of the downsides to that, and they were in Canada, by the way, so they were filming in Canada. The gentleman is like the only downside. He's like, I can't ever drive to the United States to see my family because the route that I have to take, there's no hydrogen fueling station, so I'd run out of fuel. So look, that's a downside, but I don't know how. So here's my question. How capital intensive do you guys think it will be to make conversions of traditional gas stations to hydrogen fueling stations? Is that a very capital intensive process? Now again, I'm not an engineer. I don't really know the logistics of this. I mean, many of you probably know well more than me. And I think this is why we talk about these things on the stream. But do you think it's going to be difficult to convert maybe 1 or 2 pumps at a traditional gas station to hydrogen pumps? I'm sure you have to have all state-of-the-art tanks. Obviously, these are very pressurized, so who knows? Hey, E is here. Says, hey, Tom. Good to see you, E. Welcome. Zebatata, good to see you. But if you guys are enjoying the stream tonight, Please leave a like on the video and subscribe to the channel if you are new. We do these live streams about 5 days per week between New York City and Miami, and we'd love to have you join. Two says, just need to find a place and purpose. Okay. Irish Lou says, good evening, Tom. Good evening, everybody. Good to see you. Welcome. Frazier is here. Good to see you, Frazier. Paul says, not for nothing, H2O break. Oh, Paul, I think you just tricked me into FredX's comment there. Hilarious. Oh, Wendy England says JFK has a hydrogen station? I didn't know that. Interesting. So this is Thompson Street, everybody. If we cross the street, we're going to have an even better view of the One World Trade Center. The LT Prod says, I'd say it's probably much less expensive to install an EV charging station than hydrogen refueling points. I think so too. So here's what I'd like to do, and here's what I'd recommend. Number one, we got to look at the World Trade Center because it looks beautiful. That's number one. That's the first thing we got to do. The second thing we got to do is, since I don't know, right? Since I don't have the answer to these questions, I think it's important to consume both sides of the conversation. So Elon Musk did a really good interview. I think this was at one of the Tesla shareholder meetings. So if you guys go on to YouTube or open up another browser, just type in Elon Musk hydrogen vehicles. And the way Elon Musk articulates the cons of hydrogen powered vehicles is really compelling. But then again, how can you have auto manufacturers like Toyota investing billions of dollars into manufacturing and actually building out the infrastructure for hydrogen vehicles? So I don't know. Look, I think obviously Elon Musk is an extremely, extremely smart guy. But I do think there's a product market fit for hydrogen vehicles. Now, it is definitely very expensive and cumbersome to handle hydrogen, to transport hydrogen, and I think it's just important to note, as we're talking about, ESG and all that type of stuff, the vast majority of hydrogen that is produced right now is from non-renewable resources. But, as technology gets better, there are ways to produce it from renewables, which I think is good. All right, we'll go down one more block and then we'll head up. Yeah, photos from around New York's like hydrogen is also incredibly flammable too. You're right. The LT Prod. Okay. So here's a particular name that I'm going to be watching. Again, notice how I didn't say I'm going to buy this. This is just a particular name that I'm going to be watching very, very closely. So I think this particular company is actually located in Albany, in upstate New York. And I believe it's called Plug Power. So I think on a stream we're going to do a deep dive into the financials of the company, but I think this could be one of the beneficiaries of that new Inflation Reduction Bill, which is essentially just disguised as like a climate bill. All right, McDougal Street. Look at how beautiful this mural is here. Absolutely beautiful. Hey, what's next is here. Says Tom, EVs is like trying to inhabit Mars a long way with very few benefits. I think I disagree with that, but I respect your take. I respect it. I respect the take. Hey, Junior says, hey, Tom, sweet mural. What's up, Junior? Welcome. Gary is here. Good to see you, Gary. So now that we're on the topic of, ooh, that was almost an accident. Yikes. All right, you know what? Since it's Monday night, do you guys want to walk up this way? Or should we go over to Soho and then walk up? I'll let you guys decide, might as well. Narco says, I want a nuclear car. Is that too much to ask? Yeah, we could probably, pony up a mini reactor there. Put it in the bottom of your car. Dixon says the art in New York is fantastic. Soho? Okay, everybody's saying Soho. All right, we'll go to Soho. So we'll walk down one and then we'll head over, guys. We'll walk down one and then we'll head over. So speaking of non-renewable energy sources, so Saudi Arabia's Saudi Aramco reported a 90% jump in quarterly profits, obviously due to higher oil prices and higher refining margins. So net income reported $48.4 billion. This is up from about $25.5 billion a year ago. Talk about, if you want to talk about windfall, rip your face off profits, this is windfall profits right here. 100%. Oh, this place looks really nice. Yeah, Narco says, Jesus, that is insane. So just to put this into perspective for people that are just joining, if we think about the top 3 Western oil companies, so Chevron, ExxonMobil, and Shell, if we total all of their profits for Q2, it comes in right at about $42 billion. Saudi's Aramco alone did $48 billion. This isn't revenue, by the way. This is net income, so this is profitability. That is insane, just for some perspective there. Wow, we never come down here on the stream. It's actually really nice. Ton of people outside, and just for some perspective, this is a Monday. This is a Monday night in New York. Hey, Dorian H, good to see you. 3T3 says people don't understand that with a Tesla Plus, their supercharger, you go from 20 to 80% battery in about 20 minutes. That's actually a really good point. So look, I think just with any new emerging technology, there's going to be growing pains, right? I think the forward-thinking people are just going to continue to invest and continue to build. But if you look all the way here, you could actually see the Empire State Building again. Once again, it is lit up for India's Independence Day. So once again, happy Independence Day to all of our viewers in India. Happy Independence Day to you.
Just do whatever, if something,
Mr. Howard says the $48 billion figure from world's biggest oil firm is thought to be one of the largest quarterly profits in history. I know, isn't that insane? That's really, really nuts, man. That is like really, really nuts. That is like literally the definition of a windfall profits. Hey guys, we have Cosmo Scary. Good to see you. Welcome, Cosmo. Team, if you want to see some really, really good, well put together videos around New York with no talking, you got to check out Cosmo. Really, really talented. He's actually a moderator on the channel. Really, really talented guy, so please check him out. Two Harbors says nanotechnologies will solve the problems. GX72 says, Tom, what are your thoughts on Saudi Arabia's new city? So I'm actually not too familiar with that, and so you keep me honest here if I'm on the right track. So is that the city where they're thinking about building those skyscrapers that are going to be 1,600 feet tall? So almost 2,000 feet tall. Is that the thing that you're referring to? I think Saudi Arabia is planning an additional city, and it's going to be the 2 tallest skyscrapers in the world. Hey, Smee Media says, thank you, Tom, for the stream. No problem. Yeah, Bagels and Walks is like, yeah, Tom, good on you for taking things in stride. So that is actually a de-escalation sales tactic that you guys saw live in motion. So it depends on who is like the approacher. Usually if you have like a a female attacker to a male, you actually don't want to meet that force with combativeness. You actually want to reframe it and come off as you're the more meeker, insignificant person. For females, it actually de-escalates the situation immediately, and 10 times out of 10, they walk away, because they're thinking that the male is going to be turbocharged and screaming and threatening them, "Oh, I'm going to beat the heck out of you." But if you reframe that and you turn it on them to say, "Oh, I'm negotiating from a place of, you're abusing me," that like totally shocks them. It throws them off. So totally throws them off. It's all about framing. So a lot of the times, if I'm dealing with, a particular C-level executive that's, has a very aggressive personality, you don't want to meet that, especially depending on their gender. You don't want to meet that with aggressiveness as well. You actually want to sort of feed their ego. And hey, Abstract Angel Artist, appreciate it, man. And essentially to say, hey, put them as like they're the dominant, and then that makes them feel bad, and then it de-escalates automatically. Abstract Angel Artist, thank you so much for the $2 donation. You are so kind. Thank you for the support. I appreciate it. Hey, Teresa Diaz is here. Welcome. Good to see you. Hey, Sunshine After Rain. Good to see you, Sunshine After Rain. Welcome. So really quick, now that we're on the topic of sales, in my last live stream, podcast, whatever you want to call it, I did briefly mention that I was made my first appearance on somewhat of a major podcast, Akram's Razor, in 2020. You guys are so funny. You actually found the podcast, and many of you listened to it. So I got a lot of feedback on it. So I've been getting a lot of emails of people asking me how to break into enterprise software sales or enterprise tech sales. So I guess I'll talk about that a little bit. Hey, Lupe, thank you so much for the $5 donations. Here's some dough for some pepper spray. Oh my God, that always helps. Appreciate it, Lupe. Thank you so much. Very much appreciated. The comment's hilarious though. All right. So here's my tips for anybody. I'll make it more broad-based. Okay, so I probably have about 8 years, maybe a little bit more than 8 years experience now in tech sales, probably about 4 years in enterprise tech sales, which is more complex sales cycle. So enterprise sales is essentially selling large ticket items to Fortune 500, Fortune 50 companies, and the like. So my biggest piece of advice, if you want to break into tech sales in general, you got to make sure you're applying to a particular company that has a product market fit and that is making very, very big strides into the enterprise. Wow, check out this art gallery here, everybody. This is beautiful. Hey, Raphael, thank you so much for the $2. You are way too kind. So here's what I mean by that. When you're very early on in your sales career, let's say if you work at a tech company, here's the hierarchy. So I'll lay down the hierarchy for you guys right now. In most cases, you start off as something called, oh wow, look at this one. You start off as something called a sales development representative or a business development representative. And these particular employees, their job is to find leads to give to the account executive. So account executive, you are the customer facing position, right? And account executives mainly work in the small to medium sized business side, so SMB you could call it. And then from there you can move up to middle market account executive, senior account executive, and finally the holy grail where you want to be at is called enterprise account executive. Okay, so enterprise sales tends to be more complex sales cycles, longer deal process, larger deal flow. And the reason why you want to get there is because you have to think about it in terms of profitability. Okay, so let's say if you're selling $1 million ARR contract. And ARR stands for annual reoccurring revenue. And if you look at your company's earnings report that you want to apply to, and let's say they have 80% gross margins. Well, if you're selling a product that's $1 million ARR and it has 80% gross margins, well, I mean, just have your imagination of what you think those potential commission payouts could be, right? So extremely, extremely lucrative. Now, what you don't want to do, and this is why you have to be very cognizant of the industries you go into if you're thinking about getting into sales. Let's say if you work for a particular company, maybe they're in the hardware industry and they have like 5% gross margins, right? So even if you sell a very large ticket item deal, what do you think the commissions are? First thing I would do, especially if you're looking at I would start with the publicly traded software companies or SaaS companies. It could be in telecom, UCaaS, whatever. Spend 20 minutes one weekend, maybe 20 to 40 minutes, and just listen to the earnings calls. Because as you listen to the earnings calls, what you'll find is they'll tell you a specific metric. And that specific metric is the amount of deals that they closed of $100,000 plus in ARR. So if the company is trending positively in the segment of $100,000 plus ARR deal closure, and they have very, very good forward guidance to say, hey, we have about 20 deals in the pipeline, $100,000 plus ARR, customers are really liking the product, well, that's a good product market fit. And that's probably something you should be looking to apply to, because even though you're probably going to start off in small to medium business size sales, as you climb up the ladder, you know you're going to be going into an environment where customers are going to be receptive to your product. Okay, so just think about the particular customers that could potentially be spending $100,000 a year on your software. It's probably not going to be the pizza shop next door, right? It's probably not going to be the ice cream parlor. Okay, these are probably going to be Fortune 100, Fortune 500, Fortune 50 companies. And the key is this: if you could take one thing away from this live stream, is that as you sell into the enterprise, they do extreme diligence on that product. You have to get the buy-in from HR. You have to get buy-in from operations, IT. So if a particular company, Fortune 500 or Fortune 50, chooses your software product and they're spending over $100,000 a year on it, you know it's good. You know it's good. So I'll throw a couple names at you guys. Let's say if you're a new college grad, or let's say if you just want to make a career change. If I had to do it over and you had to say, if you could pick one sector to go into to sell particular software or hardware, whatever it is, it would be cybersecurity. Okay, look at the massive total addressable market. Do you think that TAM is going to be expanding? And try to pick something with extremely, extremely high gross margins. Now, listen to Zscaler's conference call. Listen to Datadog's conference call. Listen to CrowdStrike, Symantec, all of these big cybersecurity companies. If I had to do it all over and get very, very industry specific, it would be those particular companies that are selling a cybersecurity product or the like, or something that could integrate well with a cyber product.
Some good energy.
With extreme vantage point of enterprise sales focused. So maybe you're a Datadog account executive, but as time goes on, you want to move up to enterprise sales. You know, you want to make sure you're going into an industry and a company that not only has a good product market fit, very good pre-tax and after-tax margins, and an expanding TAM. So that's sort of what I'll say there. So hopefully that addressed some of the questions in the emails that I've been getting. Hey, Ed T is here. Good to see you, Ed. Ed, always appreciate you joining, my friend. So we are here in Soho. One of the things I like about this is these original cobblestone streets. These are beautiful here. These are awesome. Hey, somebody from Korea says, hi, Tom. Good to see you. Welcome to all of our Korean viewers. Hope you guys are well. Hey, War Walker is joining. Good to see you, War Walker. Henry says, is this live? Yeah, this is live. Alex is SAP. Yeah, so SAP is one of those companies where if you think about like an SAP and Oracle, those are like the original, enterprise sales guys and girls. So those are definitely really, really good name brands to have on a resume. Ibrahim Azam says, how was work today, Tom? Work was all right. It was good, but it was just busy, man. Mondays always, every single Monday I walk into like a fury of emails. The emails start coming in at like 7 o'clock in the morning, and then they die down at like 2. After I clean all that stuff up, Tuesday's usually light, Wednesday's usually pretty light, Thursday and Friday are pretty packed, but hopefully you guys had a good weekend, good start to the week too. This is Prince Street, and we are going to be walking uptown. Hey, photos from around New York says, Tom, you could definitely do some standalone videos on sales techniques. Yeah, maybe we'll do it. We'll see. We'll definitely have to see. Photos, what did you do today? Anything good? Hopefully you had a good Monday. Hey, Sandeep is here. What's up, Sandeep? Welcome. So everybody, if you want to know a little bit more about, breaking into tech sales or sales in general, what I think I'm going to do over the next coming months is incorporate some of that advice into the Behind the Street newsletter. So if you see the QR code at the top right-hand corner of your screen, if you scan that, punch in your email, it's completely free. Every other Tuesday after the market closes, here's what I'm going to do. I'll tell you. I'm going to send you a free investing email that covers not only the U.S. equity markets, but emerging markets, fixed income, the housing markets, cryptocurrencies. And then as the newsletter grows, what I plan to do is branch that off and maybe hire somebody to cover topics of how to get into investment banking, how to get into enterprise tech sales, how to get into, being a software engineer at a big company. So if you're interested in that, join us over there at the Behind the Street newsletter, scan the QR code, and Tuesday, you will receive your first email, or Wednesday, because tomorrow I have to, I'm going to be flying. I'm actually flying back to Miami, Florida. But this is the Adidas store here. We're going to be headed northbound. I think we may stop by Astor Place for a minute just so we could check things out, and then we're going to head all the way back uptown. So, hey, Elliott Wave Reviews says, hey Tom, would you say extroverts perform better than introverts in sales? Introverts perform way better than extroverts in sales. Me personally, it may not seem like it because I do a live stream, but I'm probably the most introverted person you'll ever meet. Extremely. So introverts are actually much, much better salespeople than extroverts. And the reason why I think that is because I think introverts get right down to business. They get right down to the bottom line. So that's what I would say there. Hey, Rob K says, what do you expect from Walmart in the morning? Yeah, so Rob, that's a good question. So I think Walmart and both Target are reporting quarterly earnings. So here's what I'm going to look for. Number one, let's see if they're experiencing any margin compression, okay? So I know last earnings report, Target is suffering from a little bit of margin compression, same thing with Walmart. The second thing we need to look for is inventory buildup, okay? What happened during COVID, a lot of these big box retailers ordered way too much product, way too much product, and now they have a massive stockpile of inventory, which they're gonna have to do one of two things. Either they're gonna have to discount this stuff severely, that's number one, or number two, they're gonna have to liquidate all this stuff. So I think I've said it a couple times already, but there's actually particular companies that go out to these big box retailers and will actually buy, check out this Tesla taxi here. And will actually buy all of this inventory for pennies on the dollar. Then they actually go right back around and sell it to Marshalls, to Home Goods, to Ross stores, to TJ Maxx. So again, I'll just want to reiterate on the stream, I truly, truly believe if you're in the market for patio furniture, to redo, the furniture in your living room, your bedroom, whatever it is, even if you buy electronics from third-party retailers, let's say like kitchen appliances, I think over the next 6 months you're going to see massive markdowns. So if you go into Home Goods, if you go into TJ Maxx, I think you're going to be able to pick up a lot of nice furniture for very, very, very cheap. Very cheap. Hey, Carlos Mendez is here. What's up, Carlos? Welcome. Yeah, Ollie's, exactly. Ollie's is another one of those like bargain discount stores. You're right. Ooh, we got the spam bots tonight. I think I forgot to put on subscribers only mode. But what do you guys think? What are you guys expecting at a Target? What are you guys expecting at a Home Depot? I know Home Depot is going to report as well. So. Common Man 80 says, Tom, I don't think that Walmart would sell wholesale to a third party. I'd say look for sales prices, just hang in there. Yeah, that's a good point. That may be a good point. I do think you're going to see prices come down for things, which I think is going to be good. So if we had to take a poll just for fun, what is like sort of the main discount? Let's get away from this. What is sort of the main discount retailer that you guys shop at? Is it Marshall's? Is it Home Goods? Is it Ross Stores? Is it TJ Maxx? If I had to say where I frequent the most, it's probably Marshall's. However, ever since I moved to Miami, I've been going to Ross Stores a lot. Is anybody familiar with Ross Stores? Anybody familiar with that? Marshall's, Dollar Tree. Dollar Tree is a good business. We'll talk about that too. Chris says Marshall's. Walking Minnesota says Amazon. You just get your stuff off Amazon. Okay. Rebel Poet says, hey Tom, I pretty much just do all my shopping on Amazon. Okay. Yeah, Mario 13 is like, I love Ross Stores. I don't think there's any in the Northeast, to be honest. When I moved down to Miami, that is the first time I ever saw a Ross store. Daryl says Family Dollar. Family Dollars is good. The ABX girl says Home Goods and Five Below. Ooh, you're right, Five Below, that's another one. You're right. A little bit of a segue. I have to do it since we're here. Gasoline Alley Coffee. Fantastic. Just let me delete the spam bot again. Apologize. But if you guys are in Soho, NoHo area, this is a really, really good coffee shop. Really, really good right here. Dorothy says, yeah, they're down south. They're pretty good. Yeah, the LT Prods is awesome logo, right? Isn't it good? Yo, let's take a quick water break. I gotta rehydrate here, everybody. So I'm gonna put you guys down a minute. So while I'm putting you guys down, what do you guys think about the new logo? What do you guys think about the new Walks in Wall Street logo? Good, bad, ugly, indifferent? What do we think? Not bad, right? Hey, Tara says, I wait until grocery stores put meats at half price, then I buy it. Okay, we are hydrated. Hope you guys are hydrating too. No complaints? All right, not bad. Ryan Royal's like, Tom, Steven Spielberg is going to call me to do special effects. Yeah, I bet. That's funny, dude. Yeah, so I'm not doing anything special. It's just on the Prism live stream app. You could just punch in whatever you want. In any event, speaking of like red meat, things like that, we did cover Tyson Foods earnings report on the stream. And something that's interesting that we could sort of take from Tyson Foods earnings is that we're seeing a shift in consumer behavior here. So why might that be? Well, the first reason is if we listen to the report, and you guys, if you go to tyson.com /investor relations, you'll be able to listen to the earnings report for free. Okay, it's all free. You can listen yourself. One of the things that one of the C-levels came on and said is they're seeing extreme, so very, very extreme demand for chicken and shifting spending away from red meat. Now, why might that be? Well, because usually, right, I know, and not in all cases, but in many cases, red meat is obviously way more expensive than chicken. So potentially, as the CPI is printing at 8.5%, as inflation is ramping, it is a very good possibility that consumers are now just starting to shift their habits to save some money. So maybe instead of eating, let's say, red meat 3 times a week, they're cutting that back to 1 time a week. So I thought it was interesting to see that out of Tyson Foods. And as we have Walmart, as we have Target, and as we have Home Depot reporting this week, to sort of piggyback off of that idea, let's see if they make any particular comments about consumer behavior purchasing name brand products as opposed to the store brands. So if we see a shift to people saying, okay, I'm going to go to Walmart, I'm going to buy cereal, I'm not going to buy the General Mills cereal, I'm going to buy like the Coco Roos or whatever the third party brand is called. I think you guys sort of understand what I'm talking about. Funny enough, last earnings report for Walmart, I believe they actually said that. They said that more consumers are choosing the store brand products as opposed to the name brand. And funny enough, the store brand products are actually more gross margins. There's actually more profit margins selling store brand stuff. Yeah, somebody says, Gary says, come on, man, so has eggs. Yeah, eggs. So in the inflation report in the CPI, I think eggs were up like 20% year over year. Hey, Roland is here. Says hello from Peru. Welcome to all of our viewers from Peru. Appreciate it. CM says, I always pick store brand. Zems, the streets look so full of rubbish. Even Sao Paulo, Brazil is looking that bad. Nice. Abstract says, yeah, egg prices have been climbing here too. Yeah, so I mean, that's another thing we talked about as well on the stream. So even though CPI came down a little bit, the 2 main areas where we're still seeing a problem is number 1, shelter, right? Because shelter makes up about 33% of the CPI. And number 2, food at home. So really the 2 main components are still giving us a little bit of issues here. What I think brought down CPI mostly was obviously energy, right? Crude oil, gasoline is coming down. But if you look at one of the main expenses of any American, shelter, that was actually up 5.1% year over year. Hey, Kenny is here. What's up, Kenny? Says, hey, Tom. Greetings from beautiful Vancouver, British Columbia. Love that. Good to see you, Kenny. Welcome to New York. Appreciate it. Hey, Melissa 2087 says, quiet Monday night. Good to see you, Melissa. The LT Prod says, I'm seriously considering buying some chickens where I live. You know what? In Miami, Florida, I hear roosters. Either they're roosters, I don't know what they are. But when I wake up in the morning, I can actually hear these roosters crowing. They're like really, really loud. So I think it may actually be feasible where I live too. Hey Sebo says, hey Tom, South Africa here. Good to see all of our viewers from South Africa. Welcome everybody. Diane says, I think more before I buy produce. Will I use it all? Can it be frozen? Yeah, that's definitely a good strategy for sure. Hold on, let me know if the camera is focused, everybody. I think after we had that incident, the focus may be on, or maybe off. Warwalker, any roosters in your neck of the woods? Let us know. Camera looks good. Copy that, over and out. So I want to introduce a new segment to the stream. Maybe you guys will hate it. Maybe you guys will like it. I guess we'll never know until we do it, right? So I guess we'll do it now. Unless you don't want to. We'll do it anyway. So a big piece of economic news that came out today, obviously, New York Empire State Factory Gauge did plummet in August into deep contraction territory. Manufacturing activity in the state of New York fell 42.4% to negative 31.4. Economists were actually expecting a 5 reading, a reading of 5. But economists missed the mark by a pretty wide margin. So we're expecting a reading of 5. We actually got a reading of about negative 31. So here's what hedge fund manager Dan Tapiero said. And let me post it on the stream. So this is the tweet of the day. So Dan Tapiero is a hedge fund manager of T10 Holdings. And the reason why I think it's important to show you guys this tweet, let me see if I can get it from behind the chat. Hey, Wendy England, thank you so much for the donation. You are way, way too kind. The reason why I think it's important to show you guys this tweet, let me see if I can actually get it here, is because Dan Tapiero actually used to work directly for Stanley Druckenmiller. And Stanley Druckenmiller is widely regarded as one of the greatest investors of all time. So as we got that manufacturing report out today, here's what Dan Tapiero said. He says, complete and utter collapse. Fed over jawbone / guided the interest rate market too much too high rate levels. Liquidity dried up, big time yield curve inversion starting, growth and inflation collapse into Q4 / Q1. Now, do we agree with Dan? Do we think he's right here? If you guys have not already, please go follow Dan Tapiero on Twitter. He is just a wealth of knowledge, wealth of information. Very, very well-respected hedge fund manager that I had the pleasure of meeting a couple months ago. So that is the tweet of the night. So do we think he's right? Do we think the Fed jawboned this economy into a recession? Do we think the Fed has actually done too much to cool inflation? Do we think the Fed has raised interest rates too high? Do we think the Fed has done too much in terms of quantitative tightening, reducing their balance sheet of mortgage-backed securities and U.S. Treasuries? So if you read the tweet, Dan Tapiero's stance is that the Fed has gone too far. They've caused absolute demand destruction where they didn't need to. So do we agree with him or do we not? But Wendy England, thank you so much for the $10 donation. You are very, very kind. I appreciate you very much. It says, here's to hydrogen. Thank you. Nako says, I am not sure where would we be without the Fed's involvement. FredX says, is the Fed for me or against me? Yeah, it's a good question. Hey, Daza UK, thank you for joining. Chris says, I think it may be too early to know, in my opinion. Okay, so here's what I think. I agree and disagree with Dan Tapio. And I know that sounds like ridiculous, but I'm going to sort of explain my position. So I do not believe it is the Fed's job to prop up the stock market. Okay, I think ever since the great financial crisis, money managers on Wall Street and average retail traders, anytime there's a little bit of a downturn in the economy, you know, we have to cry uncle and have the Federal Reserve come in here and save the day and lower interest rates to rock bottom levels and expand their balance sheet. This is the IBM Watson building, by the way. So now that we know that inflation is running at about 9.1% or most recently about 8.5%, I think it's more important for the Federal Reserve to get inflation under control than to worry about propping up the stock market. And here's why I think that. The vast majority of Americans don't own these assets that are being inflated by the Fed. The vast majority of assets are actually owned by the top 1% or the top 5 to 1%. The average everyday American is living paycheck to paycheck on a very, very fixed budget. So for example, let's say if you budget $500 a month for food, and you could make it work and you could feed your family. Well, if inflation continues to run at 10% year over year and your salaries are still negative, factoring in inflation, that's going to really, really hurt the average person, okay? And if you leave interest rates unchanged and you don't raise interest rates, you're never going to cap inflation. So I would sort of argue here that yes, the reason why the stock market has gone down is because the Fed's tightening. But I actually believe we may have bottomed here because the market is usually looking forward about 6 months. I think the market has really priced in a lot of these rate cuts. But at the end of the day, I don't think the sole job of the Fed should be to manage the market. I do not think that is their sole responsibility, if you will. But I don't know. Let me know you guys' thoughts. Let me know what you think. Elliott Wave Reviews is telling why is it that it's always Bitcoin and gold bugs that are so pessimistic about the U.S. economy? Playing the devil's advocate here, but is it perhaps because they have a vested interest to do so? I mean, you're definitely, I wouldn't say you're wrong, right? I think everybody likes to talk up their own book. You know, again, we always revert back to Peter Schiff. I mean, Peter Schiff, I think, is a fantastic economist. I think he's I think he's a smart guy, but if you've listened to him over the past 8 years, you didn't make any money. Okay, Peter Schiff would have kept you out of the stock market. You would have missed all of the true market leaders. You would have missed all of the Amazons, all of the Alphabets, all the Microsofts. You would have missed all of the good stocks if you listened to Peter Schiff and just bought gold, right? So I think to an extent, Elliott Wave Review, everybody is talking up their own book. Right? I mean, Peter Schiff owns Schiff Gold. I mean, what is he going to say? Oh, gold is going to underperform? He owns a gold company, so of course he's going to talk his book in that regard. I think he may be right. Now, don't get that confused with me saying that I think Peter Schiff is a bad person or something. I think he's incredibly smart. I've learned a lot from Peter Schiff. But at the end of the day, I always like to sort of model like a Stanley Druckenmiller or a Paul Tudor Jones, where they're very objective in thinking. They're not worried about being right. And I think the best investors, if you look at Ray Dalio, if you look at Paul Tudor Jones, Stanley and Druckenmiller, Tim Draper, all of these guys are sort of trend followers, right? And they're not worried about being right. They're worried about making money. Peter Schiff, the Max Kaisers of the world, they're worried about being right. Peter Schiff is like, see, the economy is going to crash, the world's going to fall off a cliff, and gold's going to go to 100,000, right? He's so fixated on being right because they have ridiculous egos. If you want to make money investing, or even in life, even in sales, if you have a sales job, don't worry about being right. You don't have to be right, okay? You can learn from other people. You could course correct and say, hey, I had this bull thesis on gold, but it looks like the trade's going against me. I'm going to listen to a different opinion and adjust and adapt. So lose the ego, Don't worry about being right. You don't have to be right all the time. Okay? Nobody's perfect. Just worry about making money. I don't know. FredX, what's up? Hey, Exploration says the IRS are crooked. Lil Yell says, isn't Peter Schiff a scam artist? No, I wouldn't say. He's not a scam artist. Ibrahim Azam is joining us. Hey, Ibrahim, welcome. If you want to watch I think I've already showed you guys this interview already by Stanley Druckenmiller, but it's always good to go back and watch these interviews to refresh yourself. So if you type !Druck, D-R-U-C-K in the chat, take 20 minutes, 30 minutes, check out the interview. Hey, Louise is here. It says, hey Tom, I am from Brazil. First time in your live streams. Congratulations on a good live stream. Well, thank you so much. I appreciate that. You know, as I've been looking at the YouTube analytics, we have a lot of Brazilian viewers. So thank you to all of our Brazilian viewers. We love to have you here. Love talking to you guys. Abstract Artist says, for the hood snacks. Cheers. Thank you so much for the $2 donations. Hey, Common Man 80 says, I play safe and prudent. That's why I long-term invest. I stay away from options. Sorry, but I'm a chicken. I think I do the same thing as you. I'd have to agree 100%. So the vast majority, I would say, of my retirement, right? If you talk about like an IRA, it's all indexed into a index fund that tracks the S&P. But I also do have a taxable brokerage account via Interactive Brokers where I manage a long-short portfolio. But, oh, God. Oh my God, dude. I saw that guy's life flash before his eyes. Gotta pay attention. See, the thing about New York drivers is they'll kill you. They don't care about people. They think, oh, if I have a green light, you're gonna be roadkill just because I have the green light. And I think that's a very short-sighted way of thinking, but I guess I can't change the way people think. Louise, is a recession coming, Tom? Well, technically we're already in a recession, right? We have had 2 negative quarters of GDP growth. And we also got really, really egregious manufacturing activity out of New York State today, showing extreme contraction and very pessimistic views on the economy. But we also heard from the National Association of Home Builders, or the Wells Fargo Housing Market Index. That also dropped about 6 points in August to about 49. So anything below 50 signals contraction, but we've been rolling over for quite some time now, so. Yeah, you guys are like, that was close. That was too close, man. Too close. So here we are at Union Square. So this was the 8th straight decline in the index. Tighter monetary policy from the Federal Reserve and higher construction costs have brought a housing recession, says economists. And I think this goes back to Dan Tapiero's tweet. Demand destruction in the marketplace. Now, I'm not saying that's a bad thing that the Fed caused all this demand destruction. I think we need to get inflation under control. Oh guys, quick segue. Today I was actually watching the mayor of New York City play chess right here. So if you guys see a news video or something or an article, I may be in it. I was actually right behind the mayor of New York City playing chess right there. Lynn says, good thing Tom is always aware. God bless people in New York. Appreciate that. Gary says, you think New York drivers are terrible? Come to Charlotte. Dude, you got to come to Miami if you want to see really bad drivers. Hey, Steph Wright, what's up? Says hello from England. Good to see you, Steph. Hope you're well, Steph. So as we walk up Broadway here, we're going to be able to see a beautiful view, once again, of the Empire State Building, all lit up for India's Independence Day. Miguel is here, says, hey, from Argentina. Very beautiful night in Manhattan. Thank you, Miguel. Yeah, so Miguel, keep me honest here. I think Argentina raised interest rates 850 basis points. Is that correct? Is that right, Miguel? Common Man 80 says, hey Tom, I think we're looking at a major homeless problem by spring of next year. Spring of next year. We're in it right now, dude. It's and it's not just exclusive to New York. I mean, there's crazy people everywhere, man. I mean, you got to be safe. Hey, Zem says, I'm going to England vacation on October 1st to the 15th. London and Liverpool. I'm excited. Dude, awesome, man. Hope you enjoy your vacation. That's fantastic. Oh, these are these one-wheeler things. These are so cool. Hey, one says, what's up, Tom? That's right. Crazy people are everywhere.
Yeah, and then.
Yep. Wow, Stonk says you bought, which IPO is that? CHG, Corporate Housing Group IPO. So I'm gonna recommend the book for you, and I think you're gonna appreciate this. So Eve Bobach and Kathy Donnelly, these are two powerhouse women on Wall Street. Respect them very, very much. So Eve Bobach was a former trader, I shouldn't say that. Used to work for the Federal Reserve, and now she is a trader at Ropel Capital Management in Chicago. Kathy Donnelly is also a proprietary trader. So they wrote this book called The Life Cycle Trade, and I would really, really recommend you read it. Go out and buy it. It's $20. Make the investment. Just do it. And it's a conclusive study on all initial public offerings dating back to the late 60s. And essentially what they outline, one of their theses is that every new IPO goes through a life cycle. And one of those is the institutional due diligence phase. So when a company goes public, obviously they report earnings every 4 quarters or every 3 months. So they'll release 3 10Qs and a 10K. And the 10K is inclusive of the 4th 10Q. And the theory there is that when a company goes public, many of the investment banks will assign an analyst to that specific stock to make sure their earnings trajectory is sustainable. So is that particular company beating expectations and raising forward guidance? So usually, I'll cut right to the chase, if a company that goes public can beat and raise earnings for 6 consecutive quarters, that's going to attract a massive amount of institutional sponsorship. And what that means is you'll have mutual funds from Fido or Fidelity coming in there, Goldman Sachs, Morgan Stanley, you name it. And that's called the institutional due diligence phase. So you should never really buy a brand new IPO, because about 90% of IPOs tend to undercut their initial list price within a year. And the reason for that is because if we think about what an IPO is at face value, it's the transition of ownership from the private market to the public market. Okay, so that could be from founders, so transfer of the ownership from founders to proprietary traders, to sovereign wealth funds, to hedge funds, transfer of ownership from private equity to retail investors, right? So it takes a lot of time for those shares to exchange hands. But if the company is really good and they're blowing out their earnings, a lot of analysts on Wall Street, hold on, we'll let the train go by. If the earnings are really good and they're blowing out a quarter over quarter over quarter, what's going to happen is analysts at a particular firm are going to recommend it to their portfolio manager or their managing director. right, or their PM, and they're going to say, look, this company is compounding out their earnings 25% per annum, has very, very high return on equity, great pre-tax, after-tax margins in an expanding TAM. Let's make an investment. And then that is when the floodgates of institutional money pours into these particular stocks, and that's when you have that markup. So check out that book. It's a really, really good book. Once again, it is called The Life Cycle Trade by Kathy Donnelly and Eve Bobach. Two fantastic, very, very smart women on Wall Street. Once again, Eve Bobach formerly worked at the Federal Reserve and is now an equity trader at Ropel Capital Management. I believe they manage about $250 million. But check out the book. I think you're going to love it if you are into initial public offerings, IPOs. Wow, check this out, everybody. We're coming up on the Empire State Building. Hey, Shan is here. Says, hey, Tom, what do you think the odds that they'll have to cut rates second half of the year due to economic contraction? Well, I think that's what everybody's expecting, right? If it were me, I think they really need to pull like a Paul Volcker here and hammer interest rates. That's obviously going to depress asset prices a lot. But from there, that'll allow us more room to go up. So here's the theory that everybody has on Wall Street. After the midterm elections roll around, they're placing bets that the Federal Reserve is going to switch from quantitative tightening to quantitative easing. Now, I don't know, because we're getting very conflictive messages from two people. First person is Fed Chair Jerome Powell. Second person is Neil Kashkari. Every time Neil Kashkari comes on the news, I think his last interview, I think we talked about this, was on Face the Nation. So please check out that interview with Neil Kashkari on Face the Nation. And what he was telling the reporter is that they are in no way, shape, or form going to ease up on raising interest rates, because every single economic indicator they get signals that inflation is continuing to ramp. Now, I think that's up for debate, but the Federal Reserve Chairman Jerome Powell, at the last FOMC meeting, what he said to everybody, he's like, look, we think that inflation is going to roll over and we're going to be more data dependent. So let's say the next CPI number comes in even lighter than expected. I know the last one we got came in at about 8.5%. Many economists on the street were expecting about 8.9, so it came in a little bit below expectations. Well, then maybe they won't raise 75 basis points, they'll raise like 25, which is the norm. So I don't know. If it was up to me and I had to choose, the best case scenario would be for the Fed to continue to tighten all the way up till after the midterm elections. And then after the midterm elections, they could sort of take their foot off the gas, and that would align with historical norms. So if we look back throughout history in the stock market, the market actually tends to underperform during midterm election cycles, but after midterms roll through, the market usually tends to take off and go gangbusters. And the reason for that is markets generally don't like uncertainty. So I think right now they don't know if the Democrats are going to take control, the Republicans are going to take control, any new pieces of legislation. So once midterms usually roll around, the uncertainty is gone and capital allocators can get back to doing what they do best, which is allocating capital. I don't know, that's just my opinion. I'm not saying that's going to happen, but it's sort of my opinion. But guys, check this view out. This is beautiful here. If you guys have been enjoying the live stream tonight, please hit the like button and subscribe to the channel if you are new. If you enjoy what we talk about each night on the stream, if you scan the QR code at the top right hand corner, it's going to drop a link to the free investing newsletter that I write, which is called Behind the Streets. We talk about emerging markets, US equities, fixed income, as well as the housing market. So if you want to stay up to date on my thoughts on the general market and just in general recaps of what we talk about on the live streams, please, please, please scan the QR code and punch in your email. It's completely free. It's a cool way to stay connected and support the channel and stay up to date on my thoughts. Hey, 50 Cent is here. Good to see you. Robert A, welcome. War Walker, appreciate it. So what do you guys like better? This view or this view here? What do you guys think? All right, let's walk up Fifth Avenue. What do you guys want to do? Should we walk up Fifth Avenue or should we walk up Broadway? I'll let you guys decide. And while we're deciding, camera 2. The photos from around New York says MetLife is nice, but Empire State Building is more iconic. I could agree with that. I think I agree with you, photos. I think I agree. First, War Walker wants me to take the entire hike all the way to First Avenue. Oh my God. War Walker, dude, no way, man. I'm seeing a lot of Fifth Avenue, Broadway, Fifth Avenue, both. You know what, Elias? I actually like your response. I actually like your response, and I'm going to tell you why. I'm going to tell you why as we are looking at the Flatiron Building right here. You should always generally choose both, right? Because usually when people say both, that means they are very solutions-oriented people. So why seclude yourself to only Broadway when we could walk up Broadway for a little bit and then bang a right and go over to Fifth Avenue? Why would we limit ourselves to one particular street? I like your thinking. We're going to do both. I'm sold. You just close the deal. You close the deal. Somebody says go to the Jacob Javits Center. Maybe next time. You know, if we have time tonight, we definitely will. We definitely will. Zem says try some street food. I will not do that for reasons I've explained before. Definitely am not a big fan of those street food carts. Hey, Sandra's here, says, hey Tom, wow, the view is beautiful. Both a 10 out of 10, love that. Good to see you, Sandra. Welcome to all of our Canadian viewers. Cosmo Scary says, I like how Tom doesn't say no. He says, maybe next time. Well, if I say no, that the deal's done, right? If I say no, the deal's done. If you guys want to see some really, really well put together walk-arounds in New York City without any of the talking, you really, and seriously, have I ever recommended something on the stream that you guys didn't go up and look up and say, wow, that was a really good recommendation? I almost guarantee you can't think of one thing that I recommended and you guys were like, ooh, I regret taking Tom's recommendation. So now that we've framed it that way, you got to check out Cosmo Scary because he does very, very good videos. Please check it out. Hey, Brain is here. Says cart food is for tourists. Yeah, so I guess I'll tell the story really quick again. The reason why I tend to not eat from the carts is because way back in my college soccer days, we used to practice in a practice facility right on the West Side Highway, and it's called DeWitt Clinton Park. You guys could actually look it up on Google Maps. It's actually a pretty nice place. So one night, as we were walking back from practice really late, we stumbled upon like this warehouse situation, very close. It's almost right where the Central Park horses are kept for the night. And so I look in this particular warehouse, and it's all of those food vendor carts stacked up to the ceiling. And there must have been over 1,000 rats running in and out, crawling all in these food carts. There was so many rats, it was almost like the floor was moving. and these people were cleaning the carts in there. And I'm like, oh my God, I can never eat at those food carts ever again. There's a particular place on the west side where a lot of the food vendors will put the carts for the night, and that is a total rat infestation. But I don't really like telling the story because I think as the channel's grown big, I think this could actually be quite negative. So I promise that's the last time I'm going to tell that story. Hey, Andy is here from South Korea. What's up, Andy? Good to see you. Andy is our viewer from South Korea. Hope everything's going well in South Korea, my friend. Austin city limits is like nasty. Yeah, it was. Yeah. When I tell you it was literally like the floor was moving, that's how many rats there were. I think there's another live streamer by the name of Boogie Bob who also knows of a particular street in New York that I think he calls it Rat Alley. And there's a very similar amount or a very similar number of rats at that particular location as well. So it's definitely no joke, but definitely a lot of rats. So Cosmo, if you're still in the chat, do you think there's more rats now in the city than there were, let's say, in like 2014, 15? What do you think? Would you guys say, for our New Yorkers, this is a question for the New Yorkers in the chat, and maybe if you're visiting, I don't know, would you say there's more rats now than there were 5 years ago? Or do you think it's just the same and this is sort of like a placebo effect where we may just be focusing on the negative? I don't know. I think if I had to go out on a limb, I'd say there's probably more. I would say there's probably more. Stonks says, will you ever do a subway stream? That we won't do in full transparency. We will not. Bagels and Walks says, hey Tom, I do not think there are more. With reopening, we're just exposed to it more. So that's things have opened up. Maybe we're just noticing it more. I'm totally open to that idea. You could be right. Yeah, Cosmos, like there was a lot before and a lot now. You know, I think Bagels and Walks actually probably has the most rational argument. So I would have said there's probably more, but then again, if I think back to what I was doing during COVID, I was in my apartment working and I never really had time to go out anywhere because all the stores were closed. So it was less time for me to see rats. Wow, check out this view of the Empire State Building. This is on the corner of West 29th Street. West 29th Street, absolutely beautiful. You know, I think this may be my new favorite view of the Empire, right here. What do you guys think? I'm gonna give it like a 9.7. 9.7. Absolutely beautiful. And again, for those of you who are just joining, the Empire State Building is lit up for the colors of India's Independence Day. So if anybody is a viewer of the Walks on Wall Street channel from India, the Empire State Building is lit up absolutely beautiful tonight. So happy Independence Day to all of our Indian viewers from around the world. Gary says, Opal, it's India's Independence Day, correct. D-Hat says 9.75, okay. Fair. So now that we're coming towards the tail end of the stream, I'm gonna tell you guys my favorite color scheme on the Empire. Might as well. We worked hard tonight, right? We covered a lot. We covered Saudi Aramco's earnings. We covered the New York manufacturing numbers, and we covered some housing data. So I think now we can move on to the most important topic, which is what's the best color scheme on the Empire? If I had to say my number one favorite, it'd probably be during Christmas, but a close number 2 is New Year's Eve. And if you guys want to see what New Year's Eve looks like on the top of the Empire State Building, if you look back throughout my channel, go back to the New Year's Eve live stream, and you'll see exactly what it looks like. It's amazing. So I think the Christmas colors is probably number 1, close number 2. I'm gonna go New Year's Eve color scheme. I think that's fair. What about you guys? Mario's like, I agree with you. Ooh, Cindy Foley says red, white, and blue. Ooh, I may have to revise my score there. Well, once I give it, I can't take it back. But I think you're right. I think it is. I think 4th of July is top 3. 4th of July has to be top 3. Ooh, the LT Prods is the best one. Is yet to be done. Tie-dye colors. So the tie-dye is June for Pride Month. So I think the rainbow color is June for Pride Month. The tie-dye actually is was just recently for the Grateful Dead. Those are both really good ones too. This color scheme is definitely top 5. Hey, Anthony says, do you have a car in Miami? I don't, so I just get around public transportation. So right outside my house is actually the bus stop, so it's very convenient. I just take the bus. But earnings coming up this week, everybody. We're going to hear from Walmart. We are going to hear from Target. And we are going to hear from Home Depot. So Home Depot, here's what I'm looking for Home Depot. I'm going to look for average ticket prices or average ticket sales to see if consumers are actually spending more because they're buying more goods and services, or are consumers forced to spend more because of inflationary pressures. Now, if we think back to last earnings report, it was the latter, right? So average ticket, average receipt prices at Home Depot were up year over year, we're up quarter over quarter. But if we actually dig a little bit deeper and get a little bit granular, the reason for that wasn't because consumers were spending more in terms of buying more products and services. The reason for their added spending was just because the things that they buy every single day are more expensive. So we'll see if the consumer has any gas left in the tank. Hey, Cindy is here, says yes, Jerry Garcia. You're correct. Yvonne says, how do you feel about Lowe's? So I think Lowe's sort of trades in tandem with Home Depot. All right, so we are now at Herald Square. We're approaching 34th Street and 6th Avenue. Austin City Limits is Tom. I think Walmart will probably be a little short this earnings season. Definitely, I mean, potentially. I mean, I think, obviously, we talked about this, but the number one, I guess 2 things, right? We want to look for margin compression. So if gross margins are being compressed here due to inflationary pressures.
Hey, what's up?
Hey. And I think number 2, what I would say is inventory buildup. So obviously, as inventories build up, they either have to take massive write-downs or liquidate. So that could definitely put pressure on margins. And that's why I was actually rather pleased with tech earnings in general, because a lot of these tech companies, even though they had a little bit of a hit to their top and bottom line due to foreign exchange rates for reasons that we've talked about before on the stream, such as a very strong dollar or strong Dixie, they actually maintained pretty good gross margins. I was actually pretty surprised when Tesla reported earnings too. They actually maintained very, very good gross margins. Now, it did dip below 30%, but I believe gross margins were about 27 or 28%. Now, for a car company, that's outstanding. And I think that's why Tesla tends to trade at a premium from General Motors, from Ford, and all the others. Because if you think about the auto industry as a whole, what are the gross margins? Like, what are the comps, right? You know, if you go to a GM or a Ford, you're looking at like a high single-digit gross margin, maybe. I mean, maybe. But Tesla, the theory is if they could ramp up their manufacturing production while at the same time maintaining that ridiculous gross margin of around 30%, it should demand the premium. Yeah, unlimited stimulus is Tesla stock will also split on Wednesday. You're right. You are right. So if we keep walking up 2 more blocks, we're going to see one of my favorite spot shots of the Empire. Wow, Zem says I found out from Google that there's over 2 million rats in New York. Wow. That's insane. 2 million rats in New York. That means there's 1 rat for every $1 of earnings Cosmo makes a year. That's a lot of rats. That's a lot of rats. Best Bets TVs, is any cheap low-end stocks you're looking at lately? No. To be quite honest and blunt, no. So I tend to mainly specialize or just focus on like growth tech. So I think I do see some pockets of value there. But usually, so I will say this, usually if somebody says, oh, this stock is cheap, it's usually cheap for a reason, right? So if something usually trades at like, you know, let's say if it has a PE of like 5 or 10, it usually trades like that for a reason. And usually stocks that trade at a premium for a reason. So either that is they have explosive earnings growth, explosive sales growth. You know, it's if somebody says, "Oh, I found this really cheap stock," usually, not all the time, but you always have to ask yourself, it's probably that way for a reason, right? It's either the company doesn't have that good of a growth trajectory. There's either competition in the space, so they're in a very crowded market or the like. But companies that tend to trade at premiums usually tend to trade at those premiums for a reason. This guy's clanging and banging away here. And that's either for a plethora of reasons. Compounding out their annualized growth rate, 25% per annum, really strong return on equity, really strong pre-tax and after-tax margins, and all of that demands a premium in valuation, usually. So FredX, does that count as random shrieking? Let me know. So does this guy making that noise count as the random shrieking you were referring to? So a quick little announcement for everybody on the channel. Unfortunately, there will be no live stream tomorrow night. I will be traveling tomorrow. There may not be a live stream on Wednesday, depending on when I get back from my business travel. So we will be back live streaming probably on Thursday. So we will be in downtown Miami. We'll check it out. We haven't been there in a while. I'm excited. Hopefully we'll get to see some dolphins. And we will cover Walmart and Target's earnings report. But to hold this over, I will be posting 2 standalone videos at 8:30. So if you guys want to come, I will be in the chat we could sort of hang out and talk amongst ourselves as normal. But I just want to let you guys know there will be no live stream tomorrow, and probably be no live stream Wednesday. But if you guys enjoyed the stream so far tonight, feel free to leave a like on the video and subscribe if you are new. We do these live streams roughly 5 days a week between New York City and Miami. I appreciate you guys joining. I wish you a fantastic rest of the week. Hopefully everybody had a great weekend. You feel relaxed, recharged, ready to take on the week head on. So War Walker, I appreciate you. Brian, thank you so much. Mohammed, thank you so much for joining. DWG, Ryan Royal, all of our moderators, appreciate it. I will put up the QR code once again. Obviously, I do write that behind the street newsletter. It's a great free way to support the channel. Every other Tuesday after the market closes, I will send you that, where we talk about the US equity market, emerging markets, fixed income, all that good stuff. Anthony, thank you so much. Painkiller, appreciate it. CM, Felipe, EBITDA, Wendy England, Andy, Austin City Limits, photos from around New York, sunshine after rain. Make it a good one, everybody. Like, subscribe, all that good stuff. And we will see you on Thursday. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. And you just need to know where to look. Stay positive, stay focused, and we'll see you in the next one. Have a good one, everybody. Appreciate it.